Hello everyone. Welcome back to Stock Market Meridian. Today is 28th August 2026 and you're watching today's post-market report. After two consecutive falling sessions, Indian markets finally managed to bounce back into positive territory today. Markets opened on a flat note, but the first half of the session was dominated by strong bearish momentum. However, from the middle of the trading session onward, the market started recovering from its lows and finally managed to close in the positive zone. Looking at the sectoral performance, the IT and metal sectors emerged as today's top gainers. On the other hand, chemicals and consumer durables remained among the top-performing laggards. So, after 2 days of weakness, today's recovery provided some relief, but investors will be watching closely to see whether this positive momentum can continue or it's just a trap. Now, let's get straight into the important updates for today. The biggest global trigger right now is the Jackson Hole Economic Symposium meeting US. Federal Reserve Chairman Kevin Warsh is set to deliver his debut keynote address titled Financial Innovation, Implications for Payments and Policy. And this speech comes at a crucial time. US inflation remains sticky at 3.7%, while the 30-year US Treasury yield has crossed 5.3%, its highest level since 2007. Markets are therefore watching closely for any signal about the Fed's next policy move. This will be Kevin Warsh's first Jackson Hole address since taking charge as Federal Reserve Chair in May 2026. Unlike traditional Fed communication, Warsh has avoided giving markets a clear rate roadmap. Instead, he has created 5 task forces focusing on inflation, balance sheet management, data, technology, and communication. So analysts expect his speech to focus more on long-term price stability, productivity, demographics, and balance sheet discipline rather than giving a specific September rate signal. And the market is already divided. After 3 hawkish dissenting votes at the July FOMC meeting, CME FedWatch data shows a 66% probability of a rate pause, while the probability of a rate hike stands at 34% for September. But rate hikes are increasingly being priced in for December. The inflation picture is also keeping pressure on the Fed. The preferred PCE inflation gauge stood at 3.7% year-on-year in July, well above the Fed's 2% target. Adding to the pressure, the 30-year Treasury yield has moved above 5.3%. Former RBI Governor Raghuram Rajan has also argued that the Fed should already be raising rates, pointing to strong data center spending, fiscal deficits, and consumer demand. Meanwhile, the Indian rupee has shown resilience, recovering to around 95.50 rupees per US dollar from nearly 97 rupees in May. So the key takeaway is simple. Warsh's Jackson Hole speech could become one of the biggest global market triggers for the coming sessions. Next, the IT sector suddenly came back into the spotlight today, and the trigger came from the global AI leader Nvidia. Heavyweights including HCLTech, TCS, Infosys, and LTM surged as much as 5%, pushing the Nifty IT index more than 3% higher. The catalyst is Nvidia delivered another blockbuster quarter, which we have already discussed in previous video, but I am again mentioned here is the company reported Q2 revenue of $96.2 billion, representing a massive 106% year-on-year increase. Even more importantly, Nvidia guided for around $108 billion in revenue for the current quarter. The numbers reassured investors that global spending on AI infrastructure remains strong. And that optimism quickly spread across global technology stocks, including Indian IT companies. However, there is a major difference between short-term AI enthusiasm and long-term IT earnings visibility. And on the other hand, HSBC strategists have highlighted India as an anti-AI diversifier, suggesting India could benefit as investors look for alternatives during extreme volatility in high-tech markets. But CLSA remains more cautious. The brokerage has downgraded TCS, Infosys, and Tech Mahindra to hold, while Wipro and Infosys have been downgraded to underperform. CLSA highlighted mixed Q1 earnings and the long gestation period for enterprise AI adoption. Still, the brokerage believes AI project volumes could eventually outpace software deflation by FY30. So today's IT rally shows one thing clearly. AI optimism is back, but investors still need to separate short-term momentum from sustainable earnings growth. Next update is very interesting and important to the options traders. Imagine buying an option at just 1.7 rupees and seeing it jump to 68.55 rupees within minutes, only to fall back to zero before the market closed.
That is exactly what happened during yesterday's closing auction volatility. A 64,000 strike put option linked to a bank index surged from 1.7 rupees to 68.55 rupees and then crashed back to 0 rupees, all within the final 15-minute window.
At the same time, the Sensex plunged almost 3%, falling from 77,182.91 to 74,983.19 before recovering to close around 0.7% lower. The BSE BankX also witnessed an intraday fall of around 3.3% during the auction, before settling about 1.7% lower. So, what caused this extreme movement? The key issue is a timing mismatch between cash market prices and derivatives. Cash stocks use the closing auction to determine their final prices, while options continue trading during this period. When an index suddenly moves because of provisional auction prices, options that were trading near zero can temporarily appear hugely valuable. But once the final underlying price is established, that apparent profit can disappear almost instantly. The lesson for traders is extremely important. These movements may look like lottery-like opportunities, but holding the wrong position for just a few seconds can wipe out the entire capital. So, extreme closing auction volatility is something traders need to approach with maximum caution, and good to avoid that time to trade or holding any position. Next, we have seen a sharp fall in TVS Motor's share price today. The main reason is TVS Motor is preparing for a significant change at the top management, and investors are already reacting to it. The company has appointed Payman Kargar as its new Director and Chief Executive Officer, effective 27 January 2027. He will succeed long-standing CEO K.N. Radhakrishnan, who will continue until January to ensure a smooth transition. After the handover, Radhakrishnan will become a non-executive director until the company's July 2027 AGM. Here's the timing is important because TVS Motor is coming off a strong FY26. The company sold around 5.9 million vehicles globally and delivered approximately 30% annual revenue growth. And if we talk about the new CEO background, Kargar brings more than 30 years of international automotive experience, covering markets across Europe, Asia, Africa, and the Middle East. During his leadership of TVS Motor's international business, overseas operations grew rapidly, reaching around 29% of total sales volume. The company is now looking to strengthen its global presence, premium two-wheelers, EV technology, AI capabilities, and digital customer experience. So, this is more than just a CEO change. TVS Motor is positioning its next leadership chapter around global expansion and premium mobility. Next update is Ola Electric has unveiled a new strategy to make long-range EV mobility more affordable. And also for this update, market responded positively. Ola Electric shares jumped around 6% following the product reveal. The highlight is the new S1Z model, the company's first mass-market scooter equipped with its 46 series Bharat cell LFP battery technology. The scooter will be available in two major battery configurations. The first is 3.1 kWh version is priced at an introductory 79,999 rupees with a claimed IDC range of up to 179 kilometers. And the second is larger 5.1 kWh version comes at 99,999 rupees with a claimed range of up to 301 kilometers. Ola says its in-house LFP technology can reduce battery costs while improving thermal safety and battery cycle life. The scooter also comes with MoveOS 5, offering features such as cruise control, regenerative braking, reverse mode, easy park assistance, geofencing, and 12-inch wheels. But there is another important development here. Ola Electric is moving beyond its company-owned stores and expanding through a partner dealer network. So that could help the company accelerate nationwide distribution. So the bigger story here is not just a new scooter. Ola is trying to combine lower battery costs, longer range, and a wider retail network to push EV adoption into the mass market. But as a consumer, how was your opinion about these new models as keeping in mind about Ola's previous controversies on service centers and low build quality? Let me know in the comment section. Next, HDFC Bank has been under pressure, but global brokerage Macquarie continues to see significant upside. After touching a fresh one-year low of around 710 rupees following reports of a US lawsuit involving the bank and some executives, the stock recovered modestly. Macquarie has retained its outperform rating and a target price of rupees 1150. That implies nearly 62% potential upside from recent levels around 712 rupees. However, there is one major overhang: leadership uncertainty.
HDFC Bank shares are already down around 27.9% year-to-date in 2026, significantly underperforming in the Nifty 50 index. The bank is also preparing for a CFO transition, with Puneet Sharma scheduled to take charge on 1st September 2026. But the bigger question concerns is about CEO Sashidhar Jagdishan, whose current tenure ends on 26 October 2026, because the market is closely watching the board and RBI for clarity on his reappointment.
If the issue is resolved quickly, the stock could regain stability. But if an external successor search begins, uncertainty could continue for more longer term. So for HDFC Bank investors, the immediate focus is clear. Fundamentals matter, but leadership clarity may determine the stock's near-term direction. If you have already invested in HDFC Bank, then let me know your opinion for long-term and also for short-term in the comment section. And also guys, if you found this video helpful, then please like this video and subscribe to our channel for daily pre-market and post-market video. Next update is a potential transaction involving one of India's most closely watched corporate stakes is back in focus. According to reports, Tata Sons and the Shapoorji Pallonji Group have held multiple discussions around a possible exit or partial monetization of the Mistry family's stake in Tata Sons. At present, the SP Group owns around 18.37% of Tata Sons, making it the company's largest minority shareholder. And here, the question is, why is this important right now? This is important because of SP Group faces a repayment obligation of around 3,500 crore rupees by the end of September. Lenders are therefore pushing for tangible progress on monetizing the stake. Several options are reportedly being considered, and these include Tata Sons or group companies buying back part of the stake, Tata Sons selling minority holdings in listed group companies to fund the transaction, or bringing in global private equity or sovereign wealth investors. An IPO could also provide a market-based exit. However, Noel Tata, chairman of Tata Trusts, currently favors keeping Tata Sons unlisted. Also, the financial pressure on the SP Group is significant. The broader group carries more than 50,000 crore rupees in borrowings, while its recent 21,500 crore rupees private credit refinancing carries interest costs of around 18% to 19%. The group wants to refinance this debt at a much lower rate. At the same time, Tata Sons is also preparing for a major leadership transition, with N. Chandrasekharan not seeking a third term and continuing as chairman until February 2027. Therefore, this story is much bigger than a simple stake sale. The coming months could be crucial for the SP Group's finances and for the future ownership structure of Tata Sons. Now, moving on to the next update. India's telecom sector delivered another interesting development in July. According to TRI data, India's total telecom subscriber base expanded to around 135 crores, with more than 55.38 lakh net wireless subscribers added during the month. And this time, Bharti Airtel took the lead over Reliance Jio. Airtel added approximately 26.88 lakh subscribers, while Jio added around 24.46 lakh. Together, the two companies accounted for more than 92% of total net additions. Meanwhile, Vodafone Idea added around 2.4 lakh subscribers, while BSNL added nearly 1.69 lakh. And MTNL, however, lost around 5,744 subscribers. The key takeaway is that India's telecom market continues to expand, but the battle between Airtel and Jio remains the biggest story. And July's numbers give Airtel a small but notable victory in monthly subscriber additions. But in this month, Airtel has removed some popular plans, and other side Jio added some attracting plans for monthly subscribers. So need to watch August month data to get clear market direction in this sector. Renewable energy stocks are once again in focus. ACME Solar has added another major project to its dispatchable renewable energy portfolio. The company has secured a 300 megawatt contracted capacity under SECI's 6,000 megawatt-hour assured peak power tender through tariff-based competitive bidding. The project has been awarded at a tariff of 6 rupees per kilowatt-hour for the full PPA duration. And this is a long-term commitment. The contract runs for 25 years, with power supply expected to begin within 18 months of signing the PPA. The project will connect through the interstate transmission system, allowing ACME Solar to supply power during peak consumption periods. The company says the award provides long-term cash flow visibility. So ACME Solar is not simply adding renewable capacity. It is building a portfolio designed to provide power when demand is highest, a critical advantage in India's evolving renewable energy market. Next, Waaree Renewable Technologies, securing a significant project.
The company received a letter of award on 28th August 2026, means today, for the EPC execution of a massive 291 megawatt peak ground-mounted solar PV project, combined with a 280 megawatt-hour battery energy storage system.
The project has been awarded by a leading Indian thermal power producer looking to expand its green energy portfolio, and the order completion is targeted for FY 2027-28. The important part here is the battery component. By integrating 280 megawatt-hours of energy storage, Waaree Renewable is strengthening its ability to deliver more reliable and dispatchable renewable power. So this order is significant not only because of the solar capacity, but because it combines solar generation with large-scale battery storage. KPI Green Energy continues to expand its renewable energy portfolio across Gujarat. The company's total project portfolio has reached around 2.57 gigawatt peak, with nearly 1.16 gigawatt peak already energized and another 1.41 gigawatt peak under execution. During August, KPI Green energized an additional 130 megawatt/195 megawatt peak, taking the total commissioned capacity of the project to around 269.70 megawatt/389.70 megawatt peak. But the bigger focus is diversification. KPI Green is expanding beyond solar into standalone wind projects and utility-scale battery storage. Its subsidiary Sundrops Energia has also signed battery storage agreements with GUVNL for 2 standalone projects. With most operational and pipeline projects backed by 25-year PPAs, the company continues to build long-term cash flow visibility. So KPI Green is not just adding solar capacity, it is steadily building a broader renewable energy and battery storage portfolio. Finally, Happiest Minds clarifies ITC Infotech acquisition rumors. And finally, we have an important clarification from Happiest Minds Technologies. The stock dropped around 6% since yesterday following reports that ITC Infotech could acquire the promoter's stake. The sharp move prompted the National Stock Exchange to seek an official clarification from the company. And the Happiest Minds has now responded. The company said that no disclosable event has materialized under SEBI listing regulations. It specifically stated that there is currently no information requiring disclosure under Regulation 30 of the SEBI LODR regulations. The company also said it regularly evaluates strategic opportunities as part of its normal business activities. However, management did not comment on the stock price movement and said it would inform the exchanges if any concrete event occurs. So for investors, the message is straightforward. The acquisition remains speculation for now, and there is no confirmed transaction disclosed by Happiest Minds. And that's all for today's post-market video. If you found this analysis useful, make sure to like this video, share it with your fellow investors, and subscribe to Stock Market Meridian for daily pre-market and post-market reports. I'll be back Monday morning with another detailed pre-market report covering global markets, important corporate developments, commodities, and the key factors that could influence the Indian market before the opening bell. Until then, signing off. Jai Hind.